to start writing the accounts books. Okay, when we start writing the accounts books, remember. So today let us see how to start writing the accounts books. Now suppose I want to, this is called financial, remember in accounts this is called financial year. Our accounting financial year starts from 1st of April and ends on 31st of March. Okay, and this is the previous year, the first of which is already over. This year is already over. Now suppose you want to write the account of this financial year. To write the accounts of this financial year, we require some data of previous financial year. Remember, this is very important. You have to note down. To write the accounts, suppose somebody told you to write the accounts of this entire financial year. Okay. Now, first thing, before starting the transaction level, okay, first what we want to start writing the accounts of this financial year, we require some data of previous financial year. Previous financial year is very important. Which date is very important? 31st of March. Remember, when we want to write the accounts of this financial year, we require balance sheet of this financial year. Remember, your accounts always should start with balance sheet. Okay? Whether it's a new business or an old business. If it is a new business, we have to prepare the balance sheet first. So the account starts with balance sheet. So what I mean to say, if I want to enter the accounts of this financial year, first you require the balance sheet of previous financial year. Now why it's so? Now for example, see, balance sheet is nothing but your liability and assets. What is the meaning of liability? Liability is all payables, remember. Payables means what? For example, in this financial year, we will be doing a lot of transactions like sale, purchases, these expenses, this and that. Okay. In this financial year, suppose we have taken loan from ICICI Bank. Suppose we have taken the loan from ICICI Bank 5 lakh. Okay. Out of that 5 lakh, till 31st of March, we have already paid 3 lakh, say about 2 lakh is already paid. 2 lakh is already paid. How much is left? 3 lakh is left. So this 3 lakh will be on 31st of March of the previous financial year. This 3 lakh will be called as closing balance in accounts. Okay. Now this 3 lakh, which is the closing balance of 31st of March, we are showing on the balance sheet of 31st of March, ICICI Bank loan, say 3 lakh. So this is the 3 lakh which is left to pay. So this is the closing balance as on 31st of March this year, and this balance will carry forward to the 1st of April as an opening balance, remember. So this balance is of 31st of March, is a payable balance, not paid. This balance is, this loan is left to pay. Okay. So that means when we will be paying that, this financial year is over. So we will continue paying this loan on this year. So this is the closing balance of this year, which will be opening balance on 1st of April. Okay. Similarly, in this financial year, suppose we have purchased the goods from XYZ company worth of rupees 50,000. Okay, and this bill is not paid till 31st of March. These are called creditors, remember. Again, we will be showing on the liability side, say XYZ company, say 50,000 is payable, which is not paid. So this is where, remember the meaning of liability. Liability is all payables. Okay. Similarly, in this financial year, suppose the salary is not paid till 31st of March, the salary is not paid. March salary, normally we are paying in what? Next year, that is April. So salary is not paid, worth of say about 2 lakh. Will be showing in the balance sheet. Salary payable. Payable say about 2 lakh. So liability side, remember, all are payables. And assets is a recoverable. Assets are recoverable. Recoverable means what? For example, assets means what we have and we will be utilizing that in the next year. Now, for example, whatever money is there in the bank is an asset for us. Okay, so the money which is there on 31st of March of the last year, 31st of March of the last year, we'll be utilizing this money in the next year. Suppose we have money in ICICI Bank asset. I'll say we have money in State Bank of India. Okay, 15 lakhs. This is the money actually of 31st of March of the previous year. We want this money in the next year to continue. That is called cash at bank. Okay, money which is there in the bank as on 31st of March. Similarly, cash in hand, cash in hand. Cash in hand is your whatever money is there in your drawer as on 31st of March. It will continue next year as opening balances. These are the closing balances. Similarly, suppose I sold goods to Mr. Deepak and we didn't receive the money from Deepak till 31st of March of the previous year. So when will be receiving the money in the new financial year? So 20,000 is recoverable receivables amount from Deepak. Okay, suppose we have given the loan to someone. So loan to say Mahesh, we have given the loan to someone, say 10,000. This money will be here. I have explained about this loan, ICICI Bank loan. We have taken this loan which is payable. Payable means a liability. This is the loan we have given to someone which is will be receiving that loan. It's an asset. So this is, remember, in short, to start writing the accounts of new financial year, we require the balance sheet of what? Previous financial year. Okay. So this is the original balance sheet we will enter today. So to enter the balance sheet, I'll go to account information, ledger, create. So I'll show you the original. This is my original balance sheet. Okay. Now here it's a partner's capital account. So Ranji, this is a partner name. Then Shiri is a partner name. So what I'll do, I'll just go to say Ranji Capital. Okay, under capital account. Amount directly you take it from this. Don't use this add less. This is last year. You take this value directly. 63 lakh 14,000. 63 lakhs 14,320. 63 lakhs 14,320. Okay. Then next one is Shiri Capital. So again 63 lakh 14,300, 14,320. Okay. Then there is one more, Remy Capital. 63 lakh 14,320. Okay. Then you take this current liability, sundry creditors. Okay. Here the names are not given for the sundry creditor. You can directly create sundry creditors also. Actually, we want the names of sundry creditors. I'll give the later on if you want the names, but right now what you create, sundry creditors, under sundry creditors. Okay. So next one, audit payable. All these tax audit fees, all these are payable. You create all these payable under provisions. Okay, all these are payable under provision. This is tax minus sign. Remember, this is minus sign you have to put. Okay, here fixed asset, furniture, you have to put directly this figure you have to put as a furniture. Machinery, you have to put directly this. Vehicle, directly these figures. All this you take the outer. Don't try to create depreciation ledger. Okay. Loans and advances. This is it will come under the head of loans and asset. Remember, it will come under the head called loans assets. Loans and advances asset. This is advance tax paid. Again, it will come under, all this will come under loans and advances asset. Okay, but advance tax, you directly take this figure. Don't take this inner figure. Okay. About cash and bank balances, cash in hand, so and so, cash at bank, Canara bank account. You have to create this bank account under bank. Cash will be already there. To enter the opening balance in cash, you have to come out of this alteration cash. Then you enter the opening balance of cash. Okay. Okay. Next, Kotak Mahindra. All this you have to create a bank accounts. Okay. Yeah. So this is the original balance sheet we will enter today. So to enter the balance sheet, I'll go to account information, ledger, create. So I'll show you the original. This is my original balance sheet. Okay. Now here it's a partner's capital account. So Ranji, this is a partner name. Then Shiri is a partner name. So what I'll do, I'll just go to say Ranji Capital. Okay, under capital account. Amount directly you take it from this. Don't use this add less. This is last year. You take this value directly. 6 lakh 30, 63 lakh 14,000, 6 lakh 63 lakhs 14,320, 63 lakhs 14,320. Okay, then next one is Shri Capital. So again 63 lakh 14,300, 63 14,320. Okay, then there is one more, Remy Capital. 63 lakh 14,320. Okay, then you take this current liability, sundry creditors. Okay, here the names are not given for the sundry creditor. You can directly create sundry creditors also. Actually, we want the names of sundry creditors. I'll give the later on if you want the names, but right now what you create, sundry creditors, under sundry creditors. Okay, so next one, audit payable. All these tax, audit fees, all these are payable. You create all these payable under provisions. Okay, all these are payable under provision. This is tax minus sign. Remember, this is minus sign you have to put. Okay, here fixed asset, furniture, you have to put directly this figure you have to put as a furniture. Machinery, you have to put directly this, vehicle directly these figures. All this you take the outer. Don't try to create depreciation ledger. Okay, loans and advances. This is it will come under the head of loans and asset. Remember, it will come under the head called loans assets. Loans and advances asset. This is advance tax paid. Again, it will come under, all this will come under loans and advances asset. Okay, but advance tax, you directly take this figure. Don't take this inner figure. Okay, about cash and bank balances, cash in hand, so and so, cash at bank, Canara bank account, you have to create this bank account under bank. Cash will be already there. To enter the opening balance in cash, you have to come out of this alteration cash, then you enter the opening balance of cash. Okay. Okay, next, Kotak Mahindra, all this you have to create a bank accounts. Okay, yeah. For round off, create ledger round off here. Now see, whenever we are selling the goods, we are giving discount, or say we say bill round off. Okay, that means when we give discounts to other, it becomes an expense for us. So you create a ledger round off, or even you can create discount also ledger under indirect expenses. Since it is an expense for us, it's an indirect expenses. Okay, now round off, suppose you want to suppose here the bill is say 20.50 rupees, 50 paisa. You want to add 50 paisa here, just type 0.50 here. If you want to deduct the 50 paisa, so you can say minus 0.50 like this. Okay, so you can this is very important. So we have passed a lot of sales entry. So we have passed a lot of sales entries, the sale of goods as well as sale of services relating to Kavin Electronics business and Param Enterprises and all those business. We have already passed the entries. Okay. Suppose we sold goods to, now suppose I want to check the list of debtors, that is, we have passed all the entries with the party account, correct? So whatever we have passed is a bill. So whenever we are selling the goods to the party, first we have to pass the bill in sales. Okay. Suppose I received money from that party and I want to check the list of the party who has to, from whom we have to receive money. So I'll go to the balance sheet here. Detail about the balance sheet. Sundry data. See, all these data will come here. So whatever data are shown in the balance sheet, that means we have to receive money from all this party. Okay. We have sold goods to all this party. We have already passed the bills of this party. That is a sale bill. Now we have to pass a receipt from this party because we are receiving the money from this party. In sale, we have just shown the bill, remember. We didn't show the receipt. Now we have to pass the receipt. Assume that, now for example, see, I'll show you the receipt here. This is the business of Kevin Electronics. We have received the check from Anthony Fernandez. We have received the check from Anthony Fernandez. He had given me a check paid to Kevin Electronics. Means he is paying to us. Our business is what? Kevin Electronics. Okay. So I'm receiving the money from Anthony Fernandez. Kevin Electronics. I received the check from Kevin Electronics. 44,800. Okay, this is a account number. This is our account number where I'll deposit this check. Okay, so what I'll do, I'll pass the receipt entry now. See, here also it is showing Anthony Fernandez 44,800. If I press enter here, enter, so you will be able to see the bill of that party. So this is the bill of that Anthony Fernandez. Okay, now how to pass receipt of that Anthony Fernandez. So I'll go to accounting voucher now. So I'll go to the receipt here. Okay, I'll put the date of receipt when the check is received from 1st of April. Here the date is 2018, but you refer 2020. Okay, this is the past bill. So I'll put a date here. Date of the receipt is 1st of April 2020. Okay, received from whom? Anthony Fernandez. So Anthony Fernandez, I'll go 44,800. I'll check. He had given me the check of which bank? Canara Bank. But remember, whatever check I received from the party, should be debit in our bank account. And which is our bank account? State Bank of India. Okay. So whenever you are working anywhere, remember you have to put it in your bank account here. It will not be always State Bank of India. It can be other bank also. But don't refer here Canara Bank, because you have received the check of Canara Bank, but the check will go in your bank account. So which is your bank account? State Bank of India right now. So I'll do State Bank of India, and in the narration here I'll put which bank check you received? Canara Bank. Okay, check number, I'll put this check number 501500. This is a check number here. 501500 from Anthony Fernandez for bill number. Which is that bill number? You can see this bill number here. His bill number is his bill number is Anthony Fernandez. 1 minute. Anthony Fernandez bill number is 5, invoice number 5. So I'll refer to the bill number 5. That means we have received this check from Anthony Fernandez, check number so and so, towards what? Bill number, because we sold a, we have passed the sale bill, right? That invoice number here, because this is the money I received as per the invoice number 5. So enter. Similarly, I'll show you one more check received now. So I received the check from the Hotel Mandavi, 78,960 rupees. Okay, Hotel Mandavi. First I'll check whether the data is there. So balance sheet, details, sundry data. See, the Hotel Mandavi is there, 78,960. Okay, now suppose I received the money from Hotel Mandavi. Put the date, again the same date, it is 1st of April, Hotel Mandavi. Because see here the credit, remember what is meaning of credit? When I am receiving the money from Hotel Mandavi, okay, it should be debited in my account, and Hotel Mandavi's account it should be credited, because he is paying to us. So whenever I am receiving the money, it should be debited in my account. At the same time, in the party account, it should be credited. So Hotel Mandavi, 78,960. Again debit. He had given me a check of what? HDFC Bank. So here I'll put State Bank of India, our bank account only. And here I'll refer to the narrations. Which check he had given? HDFC Bank check. HDFC Bank check number is this. Check number is 524000. 524000. Okay, from Hotel Mandavi for bill number bill number. Which is that bill number? Hotel Mandavi bill number. I'll just go down. This is my Hotel Mandavi bill number 6. So I'll put bill number what? 6. Enter, enter. So like this you can pass all the receipts. So here I have given you all the receipts now. So you have to pass all these receipts. This is related to Kevin Electronic Business. 2 receipts are there by check. This is related to Param Enterprises. Again 2 checks are there. I have given you 2 checks. Those you have to pass the receipt of that. Okay. So if you want to find out, remember, suppose somebody told you to give me the details of all the party who has to, from whom the money is to be receivable. So you can go to the, suppose tomorrow the manager may ask you some question that give me the list of all the party who has to pay us, means we have to receive from. So you can go to the balance sheet, data. This will be the data. Now if I go to the data here, now see I have already passed the entry of Anthony Fernandez, right? That party is gone from here. See, it is not there because I already received it. Similarly, Hotel Mandavi was there here earlier. It is not here right now because we have already received the money from. So these are the party from whom we have to receive money from. This is the list. Okay. So tomorrow I received the money from Deepak Kamath, 10,000. I'll pass the receipt. Moment I pass the receipt, this 10,000 Deepak Kamath will go from here, from the balance sheet. It will go. Okay. It will not displayed in the balance sheet because here we have already received the money from Deepak Kamath. So yeah, these are the people from whom we have to receive from. So you have to pass the receipt. Today let us see how to pass purchase transactions. Whenever we are passing the purchase transactions, we are getting the bill from other party. Now, suppose tomorrow you got a job and you want to pass the purchase transactions. Remember, this is your party, not this. So, whenever you receive the purchase bill, we are receiving the purchase bill from the party. So, the party is this, DD Enterprises. Okay. And this party will be called as, in sales it is what? Sundry debtor. Here it will be called as a sundry creditor. Okay. Now here the following items are purchased. Total purchase is 25,000 is the total purchase. Less discount 5,000. Taxable value is 20,000. On this 20,000 there is a 12% GST. So whenever we are passing the purchase entry, so we have to create purchase ledger. Instead of sales, we have to create purchase ledger. Purchase 12%, 20,000, and this is called, instead of output, it is called the input CGST, input SGST. Okay. So let us pass the entry now in purchase. I'll put the date of the bill. Date of the bill is here 1st of July. So F2 1st of July. Enter. Bill number DDIT01 DD-IT-01. Okay. Date, party is what? DD Enterprises. Remember this party. In case of sales, we have to refer customer name, but in case of purchases, this is your party, DD Enterprises, or see DD Enterprises. Sundry what? Creditor. Remember, in case of purchase, it's a sundry creditor. Okay. Now instead of sales, now how much is the purchase now? Because we are not referring to the item what are purchased. Why? Because we have created a company with accounts only. Here the purchase value is a 20,000. This discount we don't have to create because this tax is calculated on this 20,000. So we will take this directly as a purchase value. Purchase 12%. So I'll create here, is there? Not there. Or C, purchase 12%. Under purchases, remember. Sale is a sale, purchase is a purchase. Here GST is yes, there it is a sales taxable, here it is purchase taxable. Okay, then 12%. Okay, how much is the purchase? 20,000. So 20,000. And here it is, instead of output, this will be called as an input. So I'll say, or C, input CGST. Under duties and taxes, GST central. Okay, and here all see input SGST, duties and taxes GST state. So check the bill now, 22,400. The bill is correct, so the entry is correct. Okay. Similarly, I'll pass this entry also. Now, on this bill, we have purchased the goods from what? Surya Industries Limited. Invoice number 1, date is so and so and so. IGST is there on the bill. How much? 12%. So, I'll say invoice number 1, date is so and so. Surya Industries. Sundry creditor, remember. Here it is purchase what? IGST 12%. Can I refer to the same ledger? Purchase 12%? No. I have to create a separate ledger because this purchase 12% is for CGST and SGST. I will create a separate or C purchase IGST 12% under purchases. GST, yes. You know, for IGST we are referring to interstate sales taxable. Here it is interstate purchase taxable, 12%. Okay, so total is 1,79,000. Okay, and here there is all C input IGST, duties and taxes GST integrator. So this is the way you have to pass it. Similarly, I'll pass one more. See this, we have purchased the goods from Advanced Biotech India Limited. Okay, purchase date is so and so and so. Then invoice number so and so and so. Purchase of 10,625. IGST 28%. Okay, so what I'll do? So I'll put the date, invoice number. Put a date. This one Advanced Biotech India. Bio India. Sundry creditor. So this is also IGST 28%. So I'll say here purchase IGST 28% under what? Purchases GST, yes, sorry, yes, this is interstate purchase taxable 28%. That becomes 10,625 and this is input IGST. That's it. Check the bill, 13,600, 13,600. Okay, so this is the way you have to pass purchase bills. I don't have much purchase bill. I'll be giving you only 3 purchase bills. Tomorrow I'll give some more. See, we have passed lot of purchase entries, you know. For example, if I want to see the purchase entry, I'll go to what? Display account books, purchases. See, all these purchase entries we have already passed. DD Enterprises, then all these entries we have already passed. National Enterprises, so and so. Today, suppose I paid them. These are the bills what we have passed. We didn't show the payment. Okay. Suppose I paid to DD Enterprises. Same report I can get what? In balance sheet. If I go to balance sheet, detail balance sheet, sundry creditor, I can see here all the parties to whom we have to pay. For example, suppose I paid DD Enterprises. Say I paid DD Enterprises. I'll go to the payment here. Suppose I paid this bill. I copied that in Microsoft Word actually. See, I paid to DD Enterprises 22,400, check number 500201. Okay, so I'll go to the tally and pass the payment entry. Paid to whom? Debit will be party. Why? Money goes to the party. Earlier we have seen receipt. Whenever we are passing the receipt, we are receiving the money. So debit is what? Our bank, and party account it should be credited. Whenever we are making the payment to the party, the money goes to the party. So party's account should be debited. So DD Enterprises, here 22,400 is paid because this is the check what is paid to the party, 22,400. Okay, and credit will be which bank check we have given? State Bank of India. So here State Bank of, if it is not there, create it. State Bank of India. Under what? Bank account. So this check is paid. Okay, check number you write it in the narration, 500,201, 500,201. Check number you can write here. Check number so and so. Okay, so the one payment is done. Similarly, I made the payment to Surya Industries, 2,04,080. So here debit, put the date. So I didn't put the date. 2nd of July. This is our 2nd of April. So I'll put the date here. 2nd of April. Surya Industries. I'll put 200,480. Okay. And credit will be State Bank of India. Okay. So here check number I'll put. So 780 something. It is not visible properly. So you just put any number, check number. Say CHQ number. Okay, so this is the way you have to pass all these payment entry. I give you very few payment entries, but whenever you are making the payment by check, you have to pass this entry. Sometimes we make the payment online. We are not making the payment by check. Now latest is mostly we are making the payment online. Even if we pay online also, same entry you have to pass. Debit the party account and credit what? Bank. If it is also paid online. Okay. Today I will explain you about same expenses bill with GST. See, now for example, see this bill. We have received this bill from MV Professional. Okay. So what type of bill it is? Annual maintenance contract so and so and so. Okay, annual maintenance contract, it's a maintenance bill of 1,50,000. Okay, and there is a CGST and SGST on the bill. We have received this bill from MV Professionals. Okay, now suppose you are working for MV Professional. Assume that you are working for MV Professionals. Then where you will pass this entry you have to pass it under what? Sales. If you are working for MV Professionals. Okay, so party name will be DB Enterprises. Then under sundry data, maintenance service. This is service type of bill, right? Maintenance service at the rate of 12%. Under sales, GST and all that, output CGST, SGST. But right now this bill is not sale for us because we have received this bill from MV Professional. Assume that we have received this bill from MV Professional. When we receive the bill from the party, okay, it becomes an expense bill for us. Okay. Okay. Now, assume that we have received this, not sale. We will concentrate on journal today. We have received this bill from MV Professionals. What type of bill it is? Maintenance. There is a GST on the bill. If I pass, now see this entire bill, you know, whenever we receive expenses bill, we debit expenses. What type of expense it is? Maintenance expenses, 1,50,000. Along with the maintenance expenses, also the CGST and SGST also we have to debit, remember, and credit what? Party account, remember. Okay, so I'll go to the tally now. So debit, what type of bill it is? Maintenance. So I'll put the date on the bill. Date is 1st of May. 1st of May. Here maintenance at the rate of 12%. Why 12%? Because there is a GST on the bill. 12%, and it's an expense bill. So under what? Indirect expenses. GST, I'll say yes. Okay, now what you will do here? We have purchased this service. No, we have purchased this service from MV Professional. Here, since there is a CGST on the bill, SGST on the bill, we have to say purchase taxable. Here, purchase taxable, and here is a 12%. Okay, so here maintenance services 1,50,000. 1,50,000. Now here it is asking me credit instead of credit, because that CGST, SGST input I have to debit here. I'll say D. Enter. Debit. Input CGST, that is 9,000. Debit. Input SGST, 9,000. And credit will be party. MV professional. MV sundry creditor. Okay, so this is the way you have to pass these bills. If there is a GST on expense bill received. Okay, I'll pass one more. I'll just go down. Shivram Sri Shivam Road Lines, there is IGST on the bill 90,000. Okay, this is a transport bill now. Now remember, if you are working for Shivam Road Lines, Shivam Road Lines, then this will be your sales bill. At that time, this is your customer Cipla Limited. Under sales, Cipla Limited you have to create under sundry debtors. Okay, then transportation service at the rate of, so transportation service IGST at the rate of 28%, that is, this is the 70,000, and input IGST 19,000. This is the way you have to pass this. But right now I didn't give this bill as a sale bill. Remember, we have received this bill from Shivram and Road Lines. I will just explain you that. Shivram Road Lines, we have received this bill from Shivram Road Lines. Okay, what type of bill? Transport bill. So debit what? Expenses. What is the date? Date is 5th of 10/2090. We will assume that 1st of, just put any date, because 5th will not work, because you are you are operating on education mode. Remember, whatever tally I give you is just for practice. 1st and 2nd of every month the date will accept, other dates will not accept. So 1st of May I'll put here. Okay, debit what? Transport expense at the rate of what? 28% IGST, because there is IGST on the bill. Under indirect expenses, GSTS, here interstate purchase tax, because IGST, and here 28%. Okay, so transport expenses is total how much? 70,000. And here again debit input IGST, that is 19,600. Okay, and credit party, that is Sri Shivam Road Lines. Oh, sorry. Sundry creditor. Okay, so this is the way you have to pass these bills. Upside down. So like this you just pass all these bills. Huh? Some mistake is there. Yes. Next bill is, I'll just now see, this Rajesh Associate, this is ulta ho gaya. Let it be Rajesh Associate. This is what type of bill it is? This is auditing charges. Who is this Rajesh Associate? Chartered accountant. He had given me the bill, that is what, 55,000. There is no GST on the bill. So what entry I'll pass here? He is a chartered accountant. So I'll say professional expense. This expense ledger you can put any, remember, even you can say chartered accountant expense. Okay, since there is no GST in the on the bill, I will not put at the rate of so and so. Under indirect expenses, GST applicable, I'll put space bar here, not applicable, 55,000. And here credit Rajesh Associate sundry creditor. Okay, so this is the way you have to do it. Next bill, ulta again, Sumuk and Company. This is also what type of bill? Plan charges. Who is this? Sumuk and Company. This is architect. Again, what? Professional only. 45,000. There is no GST. Again, what? Professional or architecture charges. You can create any ledger. Professional expenses, indirect expenses. 45,000. Credit what? Sumuk and Company. Sundry creditor. Okay. So next, so this is the way you have to do it. Okay. See the contra transactions. Now, what is meaning of contra transactions? So, contra transaction very few transactions. One is when we deposit a cash into bank. See, in a business, whenever you sell the goods, you are receiving lot of money, and whatever money we receive, at one time we deposit that money into the bank. Okay. So how we deposit that money? If we see, we cannot take the cash directly and go to the bank and deposit. We have to fill what? Deposit slip. This is a deposit slip of the bank. Suppose I deposited this 20,000 into bank. Okay. So the meaning of contra is only simple. That is what? Deposit. When you deposit a money into a bank, that is called contra entry. But the deposit should be in your account. So when you deposit a cash in somebody else's account, it is not contra. It is a payment. Contra means when you deposit your money into your bank, that is a contra. Okay. Similarly, withdrawn the money from the bank. When you withdraw some money from the bank through check, okay, that is also contra entry. So these two entries are very important. Okay, deposits and withdrawn. Now let us see what is debit and what is credit. The one who receive is a debit, one who pay is a credit. Okay. When you deposit a money into bank, so there are two accounts. One is a cash account and second is a bank account. Now here when you deposit a cash into bank, who is receiving the money? Bank is receiving. So definitely debit should be bank and cash should be what? Credit. Similarly, when you withdraw the money from the bank, okay, again there are two accounts. One is what? Cash and second is what? Bank. So when you withdraw the money from the bank, one who is paying the money? Bank is paying the money to you. So bank should be credited. Who is receiving the money? Cash is receiving. So debit what? Cash. So when you deposit a money into the bank is receiving the money, bank is debited, cash is credited. So when you withdrawn the money from the bank is paying you. So bank should be credited, cash should be debited. Very simple entry. So I'll pass some entry from here. I'll go to the tally, contra, I'll put the date here, 1st of April. Suppose I deposited money into new bank, say Union Bank. So when you deposit the money into bank, you know who is receiving the money? Bank is receiving the money. Bank should be debited, but here it is asking us to credit. So credit, I'll say cash, say 50,000 debited to Union Bank. It is there, not there. Or see Union Bank under what? Bank account. All bank should be under bank account. That's it. So this is not necessary to fill. Narration will be cash deposited. That's it. Again I'll put, suppose I deposited say 10,000 in State Bank of India. State Bank of India will be debited. Why? The State Bank of India is receiving the money. So here it is asking credit. So credit what? Cash. Say 10,000 from State Bank of India. So these are deposit entry. Okay. Suppose you withdrawn the money from the bank. When you withdrawn the money from the bank, means what? Bank is paying you. So bank should be credited. As I told you, one who pay is a credit, one who receive should be debited. So I withdrawn the money from State Bank of India. State Bank of India will be credited, say 4,000, and debited, say cash. Ulta entry. Again I withdrawn 1,000 from Union Bank. Union Bank will credit because he is paying. And debit will be what? Cash. These are very simple contra entry. See, how to pass entries. Remember, there are certain entries. For example, salary. See, of April salary you are getting in May. Actually, that expenses is of April, but you are getting that salary in May. Similarly, the rent. Okay. Similarly, the rent of April. Suppose your company is on rent. Okay, your premises is on rent. They are paying rent of April in what? May. So those are the expenses of actually April, but it is paid in May. Now, for example, we'll see in salary here. Every month we prepare, at the end of the month, we prepare the salary statement. Detail about the salary statement, about the calculation of the salary and all that, I will explain in the next video. But today, just we will see what entries. Now see here in this salary statement, this is your employees, assume. Net salary payable to all employees is this, payable, not paid, because we have drafted this salary statement. This salary statement is drafted on 30th of April. It is always drafted in Excel, remember. We have to pass these entries from Excel. So 58,300 is a net salary payable. TDS also payable. This is the tax. What is TDS? We will see later on. This is a tax which is to be paid to the government. TDS payable is 1,700. PF is also we have to pay to the government. That is what? What is TDS, PF? About salary statement we will see later. So all these three are what? Payable right now. So list of payables, how I have done it here. Total salary payable is this. Rent payable is this. PF payable here right now. PF payable is 4620. I'll just put list 4620, and one more is there. TDS payable 1,700. TDS payable 1,700. Okay. So all these are payables. Okay, I'll just put color for this. Okay, so all these tables. From here, we have to pass all these entries. Entries when you have to pass at the end of the month, remember. All these entries you have to pass at the end of the month. So I'll go to this. So I'll go to the journal entries. Okay, pass the journal entry. Say, assume that this salary statement is of, I'll put 31st of May. It's of May. Huh? So, okay. Now I'll go to the tally here. One by one I'll pass the entries. All these are payables of May, which is actual will be paid in what? June. So I'll pass the entry. Date I'll put F2 31st of May. So what is payable there? You know, debit expenses. What is payable? Salary is payable 58,300. So salary account debit under indirect expenses. Okay, 58,300, and credit will be salary payable. Date is very important because these are payable and salary payable under what? Provisions. Remember, all payables comes under provisions. This is one entry. Second payable entry is rent. So again I have to pass, date is what? 31st of May. Rent account debit, indirect expenses. Remember, these entries we are not passing from the bill. These are the entries we have to calculate every month what is to be payable, and then you have to pass. Okay. Mostly we are creating reports in Excel, all payables report. So indirect expenses, rent, that is 15,000, and here is a rent payable, provisions. Okay. Next entry is PF payable 4620. This is or C. PF account debit. PF is a provident fund, remember. Indirect expenses, that is 4620 credits PF payable provisions. Okay, and last one is TDS payable 1700, TDS account debit, indirect expenses. TDS topic I will take later. I'm just taking some payables, one payable entries 1700 and say TDS payable account. This is provision. Okay, so this is the way you have to pass all these entries. Now suppose the salary is paid next month now. So this is a salary statement of what? 31st of May 2020. Okay, now assume that this salary is paid. Paid on which date? Say 2nd of June 2020. Mostly we are paying these salaries online. Okay, or by checks. So as all these salaries, rent is also paid on say 1st of June 2020. Then this is PF is also paid on, all this is paid on 1st of June so and so and so. Okay. So paid on so and so. If it is paid, now this is paid on so and so date, I'll pass the payment entry. I'll go to the payment entry. Here, the salary is paid in 2nd of June. Payment on 2nd of June. I'll not put salary account here. Salary payable account. I want to clear that salary because we have transferred the salary to payable account. Now I'm paying it. So salary payable is what? 58,300. So we don't have to enter the name of the party whom the salary is paid. We create only one ledger, salary payable. 58,300 and credit what? State Bank of India, our bank account. Okay. Similarly, rent is paid on 1st of June. So payment 1st of June. So if you want to see all the payables in entries, if I go to balance sheet, you can see here provisions. All the provisions will come, PF payable and all that. Once it is paid, this will go from balance sheet. Okay. I'll pass the PF payable, rent payable, that is 15,000 credit what? State Bank of India. Okay. Similarly, debit what? 1st of June, PF payable, that is 4620 credit State Bank of India. Okay, and then on 1st of June, then TDS payable 1700 credit State Bank of India. So all this payable. Now if I see the balance sheet now, provisions, everything will go from, because it is already paid. It is not payable now. Okay, so pass all these entries. Topic which is very important when we finalize the account is depreciation on the fixed assets. Okay, these are the rates of depreciation. You have to note down these rates. Always furniture 10%, machinery 15%, vehicle 15%, computer 40%, office equipment 15%. Okay, so these are the rates of depreciation, but depreciation we are calculating at the end of financial year. Okay, now here this is very important. Here one note I have given here, any asset which is purchased before, see, any asset, this note is very important here, any asset which is purchased before 30th of September, we are calculating full depreciation. Full depreciation, these are the rates. Okay, if any asset is purchased after 31st of September, this half the rate means what? This is right now 10%, it will be 5%. 15%, it will be 7.5, like half the rate of this, if any asset is purchased after 30th of September. So I'll go to the tally and I'll pass some transactions here before explaining you. So assume that I have purchased some asset. When we purchase the asset, we pass the payment entry. First we pass the journal entry for the bill. Say debit what computer. Suppose I'll put the date here, 1st of April. Suppose I purchase some computer on 1st of April. Okay, say debit what computer account. This is not purchased to sell it, but it is for office use. So debit will be computer account, say about 25,000. If there is a GST on the bill, you have to put what? Debit input CGST, SGST. I will not put that. So credit what? RT. I purchased that from Jamson Computer. Okay. Sundry creditor. Done. Okay. Okay. Suppose I purchase some another computer, one more computer in June, say 1st of June. I'll put June. Say again what? Computer account debit. I'll put say 40,000 here. I purchase one more computer from Jamson Computer. Okay. Again in say I purchase one more computer in say November. In November, say as a computer account debit under say about 35,000. Say Jamson Enterprises. Okay. Similarly, suppose I purchase some furniture on say 1st of say May. Say furniture account debit. It's already there. If the ledger is not there, you have to create it. 12,000 debit what say Shahu Marketing. You give any name to the party. I'll just pass the bills. Okay. Similarly, suppose again I purchase some furniture in 1st of what say December. Say furniture account debit. Say about worth of 10,000. Say Shahu Marketing. Okay. Similarly, I purchase one car, say car account debit, say in say 1st of say December only. 1st of December I purchase one car account debit. It's not there. Car account debit under what? Fixed assets worth of 5 lakh. And credit what? Say I'll just pass the payment directly because there is no party for here. So car account debit, I purchase a credit what? State Bank of India. Okay. So these are the assets what we have purchased. Even suppose we purchase one machinery also. So I'll pass the journal entry for the machinery. I purchase a machinery, say machinery account debit under what? Indirect, fixed assets. Under fixed assets. I'm not entering GST part. Say machinery of say 5 lakh and credit what? Say from which company? Say XYZ company. Sundry creditors. So these are the entries I have already passed in account during the financial year. At the end of the financial year, we prepare what? Depreciation. We calculate depreciation. To calculate depreciation, let us go to the balance sheet now. I'll go to the balance sheet. Detail about the balance sheet. I'll click on detail here. See, these are the fixed assets. What we have: car, we have computer, we have furniture, machinery, and why that Shahu Marketing is here. I'll just press Control Enter here. He is actually Sundry creditor, not fixed assets. Okay. So there is a car, computer, furniture, and machinery. These are the assets what we have. So I'll go to the Excel and calculate the depreciation on the assets. Okay, let us take the depreciation on car. I'll just put here. You have to prepare this depreciation also. This report you have to prepare in Excel. This is assets. First is what we'll put car. Okay. Okay. And here you have to make say the column before SEPT September. I'll put first opening balance before September. After September, depreciation and the written down value. So these are the columns you have to prepare for depreciation. First, let us calculate the depreciation of car. So I'll go to the car, go to the balance sheet here, detail about the balance sheet, put the period here, 1st of April to 31st of March. Period is very important. 1st of April, 31st of March. Okay, open the car account, enter. See the car here. Car is purchased in December. Worth of what? 5 lakh. There is no value on top. So the car is purchased in December worth of 5 lakh. Okay. Now as per this TDS, car is a vehicle. Okay, there is a 15% GST. This one is a depreciation is there on the car, 15% GST depreciation. So important thing is, see, to calculate depreciation, first go to the balance sheet, fixed asset. I want to calculate the depreciation on car. Press enter on car here. See, the car is purchased in December. That is what? After September. This is purchased after September. When any asset is purchased after September, we have to calculate what? Full half depreciation, half the rate. Okay. Now, what is the rate of depreciation here? What is the rate of depreciation on vehicle? 15%. Okay. Car value is what? 5 lakh. Okay. So I will calculate what? 7.5% on the half the rate. So depreciation is 37,500. Okay. So I'll put it here only in this table. Car opening balance is 0 because here as per this there is no opening balances here, 0. There is no opening balances. Before purchase there is no before September nothing is there. Before September this is also 0. After September is what? 5 lakh. Depreciation on this directly half the rate into 7.5%, half the rate. Written down value will be what? Opening balance plus purchases before value plus after value minus depreciation is a written down value. Okay. Second, now I'll calculate the computer now. See the computer. This is the September month of September. This is purchased before and this is purchased what? After. Whatever is purchased before, that is total. You calculate the total of this. It becomes what? 65,000. On 65,000, I'll write it here on my table. Say computer. I'll calculate now computer. Before value, opening balance is not there. So I'll not use the opening balance. After, before, this is 0. This before value is 65,000. After value is what? 35,000. Okay. So depreciation I will calculate here. On 65,000 I will calculate. See the on computer depreciation is 40%. Okay. On computer depreciation 40%. So on before value I will calculate 40%. And on after value I will calculate what? 20%, half the rate. So total depreciation becomes 26 plus 7, that is what? 33,000. So total depreciation I'll type here 33,000. This I'll remove. Okay. Understood how to do. Before value full percentage, after value after September half the rate. So total depreciation is what? The written down value becomes opening balance plus before value plus after value minus depreciation is written down value. So next one, I'll go to the tally. Next one we have furniture. Furniture September. Again in September there is what? 27,000 is before value and 10,000 after value. So furniture. I'll just increase the size so that you can see it more better. So on furniture there is opening balance is not there. Okay. So if there is opening balance here also, you have to put the opening balance. There is opening balance here on top. Remember, opening balance means previous year data. Okay, you have to put that there. Before value, I'll just put it here just to explain you. Before value is what? 27,000. Then after value is 10,000. Okay. So depreciation on furniture on this is what? Furniture. Depreciation on furniture is 15%. Sorry, 10%. So what I'll do now? How you will find it out? So before value and opening balance you add, and on this you find out 10%. Okay. And whatever after value is there, that is 10,000, you find out what? 5%. That is half the rate. So total depreciation becomes this plus this. That is 4,200. 4,200. That's total depreciation. Okay, so this opening balance and before value you add and calculate full depreciation on this, and after September only half the rate. Okay, yeah, so this is written down value is, so this plus this minus this depreciation. Okay, now what is left now? Machinery, that is purchased in December, that is after September, that is 5 lakh. Machinery, okay, this is 0, this is 0, after is 5 lakh. On machinery there is 15% depreciation. On machinery there is a 15% depreciation, machinery 15% depreciation. So I will do here 15% depreciation after is what? 15 minutes, 7.5% depreciation. So written down value is this minus this. Okay. Now suppose any asset, now for example, suppose I purchase, I will just pass one more entry. Suppose I brought one more vehicle, suppose I purchase some, say, Xerox machine. Say directly I'll pass the payment for that. You can pass it. Xerox machine. Okay. Under what? Fixed assets. Say about 10,000. Say about 50,000. Okay. And say cash. I paid by cash. Okay. And during the year, say that machinery is that Xerox machine is sold. It becomes old and we sold that and we received money. So I'll pass a receipt for that. Say Xerox machine is sold. Okay, for what? 30,000 we have sold it. Okay, and say debit what? Say we have received the cash. It is sold for 30,000. Okay, when I go to the machinery here, Xerox machine, see the 20,000 when I press enter here. Okay, see here it shows we bought the Xerox machine. And just I'll change the date of the receipt here. Say 1st of March we sold that. Okay, now see here Xerox machine is purchase of 50,000, that is credited means sold of 30,000. There is no, right now at present there is no Xerox machine for in the business. Remember, whatever Xerox machine was there, we have already sold that. That means that machinery, that Xerox machine is not there with us. In this case, see, to find out the depreciation, first of all, that asset should be there in the business. But that Xerox machine is not there in the business, it is sold. Okay, in this case, we have to find out whether it is a profit or a loss here. So we have purchased for 50,000, we sold it for 30,000. 20,000 is a loss on the sale of this asset. So I will not find out the depreciation in case of Xerox machine, but in account I'll pass the entry on 31st of March, journal entry on 31st of March, loss on sale of asset under indirect expenses, remember. Okay, that is of 30,000 is a loss, 20,000 is a loss, and credit what? Xerox machine. That's it. Okay, so this is the way you have to prepare the depreciation report. Okay, and after preparing the depreciation report, we have to pass a journal entry for depreciation. This depreciation, total depreciation is how much? This is the total depreciation, 1,12,200 is the total depreciation. Pass the journal entry on 31st of March, debit depreciation under indirect expenses. Okay, 1,12,200, 1,12,200. Credit all the assets, that is a car. On car there is a depreciation of what? 37,500. On second is a computer. Credit what? Computer. On computer there is 33,000 depreciation. Credit then furniture. We have 4,200 depreciation, and then machinery we have 37,500. That's it. So depreciation as on 31st of March, this entry you have to pass. So to enter the closing stock of this year, this financial year, you go to the accounts information. Now assume you're this financial year, at the end of this current financial year, it is showing what 5,20,000 as a closing stock. Okay, closing stock. Assume that 5,20,000 is your closing stock as on 31st of March 2021. Assume. Okay, to enter this, to pass this entry of closing stock, what you do, go to the balance sheet, detail about the balance sheet, then go to the closing stock, enter, and alter this ledger, control enter this ledger, and here this is the closing opening balance of the previous year. Okay, now to enter the closing stock, this is the closing stock of the previous year. To enter the closing stock of this financial year, you have to just put here closing balance, that is what, how much, 5,20,000. Okay, sorry, 31st of March 2021. Okay, the amount is 5,20,000. That's it. You don't have to pass any entry for that. Just alter your opening stock ledger. Either you can alter it from the balance sheet directly, or you can even go to the what, accounts information, ledger, alter, opening stock ledger, you alter, and here you have to just put what, figure of the 31st. You have to put the date here, 31st of March, and put the figure of the closing stock. That's it. Okay, and if I go to the balance sheet now, okay, and say detail and put the period here, 1st of April to 31st of March, you will see the closing stock is what, 5,20,000 of this end of the year. Okay.